All right, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So, pretty eventful week, all things considered. Lots of earnings. We have Microsoft, most of the big tech companies getting out of the way, and most of them responded pretty well, at least at first, although Amazon, a little bit of a laggard there. That did come in off the highs. It did spike all the way up to 122 in the after hours, but then came back in pretty sharply Friday morning. But big stories on the week here outside of earnings. FRC, looks like they're going to get taken over by regulators. So really the catalyst here was Monday they released earnings. And essentially, they kind of just cut their earnings call short after about 13 minutes. Took no questions, didn't address the $30 billion that they got from all the other banks. And that actually spooked the market, as you can imagine. So Tuesday, Wednesday, we took a pretty good dump and actually closed below this green bar here. And then, Thursday, Friday, the market did float back up on light volume there. Helped by Microsoft, that was up 11% really since Tuesday's close, which $2.3 trillion company, that is ridiculously abnormal. It's a humongous move there. And Meta also kind of bringing up the rear. They had a nice pop on earnings as well. And that really helped out big tech more than anything, although the S&P obviously benefited in addition. But there was some scare early on in the week with FRC. There's some other banks, lots more downgraded as well. PacWest, Zions, Western Alliance also downgraded. These are all regionals. They look very horrible here. We've looked at the KRE multiple times, and just a very weak chart. It did come off the lows with the rest of the market by the end of the week. But again, just lots of trouble here with these regional banks. Despite that, the market has made a new local closing high. You can see here on the weekly. We just barely closed above, this April previous, we basically closed the highs of the month, right? So we had these previous little peaks there in the last 2 weeks, and we did close above that. Still below the February top, though. But for right now, markets are hanging in there. Now, there is a problem, though. Still breadth, like we talked about last week, has been terrible. Again, if you take away the and even Google reported as well, and they were basically flat to positive into the end of the week. I suppose they actually were negative on Wednesday after they reported. And then Thursday they had a nice pop, and then an inside day Friday. So a little bit more of a muted response. It's still a decent pattern there. But, if you take away Microsoft and Meta, it really kind of pulls, to show you here, let's take a look at the equal weighted Qs. You can see here, here's your high, and we still have lower highs here, really going back to February. Whereas if you look at the regular Qs, there's actually higher highs now. And so again, it's really big tech related. Apple did have a good pump on Thursday, Friday. They have earnings next week on Thursday. And the more that trades up into it, the more it's going to, the harder it's going to be to continue rallying, but we'll respect it for now. And the same thing with the FOMC on Wednesday. The more this market rallies up into that, the more likely any dovishness is going to be priced in. So definitely be careful. We're not out of the risk period at all. But we did have a nice, again, big tech really saved the day. And again, to go back to the equal weightings, take a look at the, the spiders here versus the equal weight S&P, lower highs. So again, it's really just 5-6 stocks that are really just kind of holding this market up. And that's just the way that market capitalization weighting works. You have Apple, Amazon, Microsoft, Google, Meta, etc. If those stocks are all bright green, it's going to really bring the rest of the market up. But there was lots of turbulence still in other names, and the market as a whole, the broad market, has not performed nearly as well. So again, I still think we're in a risk zone right now. I think it's likely that we could still put, that's only about 2% away here. 420, 422. That's not that far away. We could easily trade up there. In the middle of the week, we could trade up there off of the FOMC. We could get a knee-jerk reaction. We have Apple earnings that could, give the market one last jolt here. But I think that we're in pretty dangerous territory, and I think that it's looking more like we're going to have some type of a blow-off move here in the next week or so. I know we talked about that last week. Really been talking about the last couple of weeks. We've been looking for this move up here. And with that little 1-2 downtick that we had early in the week, that may have been enough pullback. That may have been enough fuel to get us up there. So spiders, They do have some upside here. I think the Qs though have a little bit less, outside of, Apple earnings. Could they, push us up to this trend line? There is a gap at 329. It's certainly not out of the question. If we get some type of a big pop on earnings, I just don't see that, that much more upside for the Qs. I think the upside more so is in the spiders as well as the diamond here. The diamond can get, back up to these pivots, maybe 343, 344. But that's really all I see at the moment. There is also this upsloping trend line there. That would be kind of like a higher, like a bigger max target. But it is up there as well. And then of course we have the Russell, which is the weakest. And this is another thing we've been talking about here. It's a red flag, right? The Russell 2000 small caps. This is, it's a much better representation of broad market. It's also a representation of risk appetite. And we're seeing lower highs still here. 1, 2, 3, 4, and potentially 5 now. Lower highs. We also had a breakdown of a little bear wedge this week. And, it did come off the lows, but still showing some laggardship there. Again, into our sectors here as we go to the semiconductors. Again, same thing. We did break that big rising wedge pattern that's visible on the weekly time frame. Now they did pop it back up by the end of the week. Again, 240 is good daily chart support, and we did get a bid off of that. I'm just not sure how much more upside is in this, honestly. This is definitely, leading, or I should say lagging, leading to the downside more than anything. And again, lower highs here on the SMH versus, the Qs, which has made higher highs. That's definitely a weak indicator. It's not a strong, and that's not a sign of strength. We want to see the semis leading. When the semis are lagging, it is a major red flag. Not unlike the Dow transports, right? So if you're familiar with Dow theory, you want to see the transports leading the Dow Jones, leading the S&P. And again, same concept here. High in February, lower highs. We actually had a head and shoulder pattern here on the transports that did trigger on the daily. It did not trigger on the weekly. You can see we did manage to close the week above that. But if we close below this trend line here on a weekly basis, that is a huge negative. And again, we're seeing here the market. Again, you can see it very, very clearly. Essentially we're into a double top, but ever since the 6th, we've had several higher highs. It looks like we're poised to make one more higher high versus the transports here, high, lower high, lower high. And then we had a slight kind of higher high there, but still the dominant lower highs are in place here. And we had a pretty good dump in the middle of the week. Take a look at UPS. This got absolutely roasted, closing at 195 on the 24th and then all the way down to the 170, really down to the 172 handle by Wednesday. So lots of weakness there in UPS. And again, the transports are a leading indicator. We definitely need to pay attention to them and do not ignore them at all, as they tell us a lot about the strength of the economy. Over into bonds here. So bonds, again, still kind of in a holding pattern. This is the 2-year yield here, or excuse me, the 2-year note. So inverse the yield. Again, still just kind of chopping sideways. Nothing too crazy going on here. You do have, somewhat weekly bullish consolidation for the most part. So I could see bonds getting a little bit of a bid here, especially if the Fed does indicate that they're going to slow down. Again, it's the expectation that they will do 25 basis points. But remember, the Fed funds rate is still about 85 to 90 basis points right now ahead of the 2-year yield. And as long as that remains the case, the Fed can slow down and back off of their rate hikes. That could give bonds a bid here moving forward. Again, there's the 10-year. If we look at the yield, that finished at 3.452. And again, just kind of stuck in this holding pattern. Maybe this can get down to 3% here, but that's really all I see at the moment. That would, probably be the case if the Fed indicated that they're going to pause moving forward. And then again, the 30-year as well. Again, we talked about this 3.2 would be kind of your big move to the downside there. But again, they're in just kind of a holding pattern. So nothing really too new to report in bond land, just holding up and holding sideways for now. Over to housing here. So XHB just continues to power up. We had that nice little pullback in the middle of the week, and then we closed at new local highs. Take a look at the ITB, new 52-week highs for that. Look at Pulte Homes. I believe PHM, that's at a new all-time high, and it's this unbelievable environment here that we're in. But these rate hikes have a lag effect, and I think a lot of this is short squeezing, to be completely honest. I think a lot of people have the same kind of idea, the same sentiment that I've shared here, is that you've got 5% interest rates and you're in front of a recession. Home builder would be obviously a sell. And when you get too many people on one side of the boat too early, I think that's been the case here for the last 6 months, probably. So they were underperforming, and I feel like it kind of got priced in a little bit, and you have some short squeezing as the market found its footing. Either way, I think these are on borrowed time here, but home builders, they're really holding up well, and we'll respect them now. I just think. They're ridiculously overvalued at this area, at this stage of the game. VNQ, general real estate equities here, still in that kind of holding pattern. This is technically bullish consolidation, but to me, it's just taking way too long to play out. I don't like the weekly pattern, and I really don't like the monthly pattern either. But if this gets a bid, there's nothing to say it can't move up a little bit higher. 85.50 to 86 would be kind of your max move there on the daily time frame. Over to financials again. So XLF, we kind of mentioned FRC already, but XLF getting a little bit of a bid. That did break this kind of upsloping trend line, so broke a little bit of bullish momentum there, but we did recover by the end of the week, and we just closed below that 50 moving average. If this consolidates a bit, I could see it maybe getting up into that 34 handle, but that's really all the upside I see for it at the moment. But again, financials did come off the lows again. KRE not so much, KBE not so much. So still big problems in some of these smaller to mid-sized banks, as we've already alluded to. And again, these issues are not going away. They're just going to get exacerbated down the line. Broker dealers here, XBD, that did have a nice little pullback here this week. And again, it came off the lows Thursday, Friday, but not nearly as much. I mean, it didn't even reclaim its 20 moving average on the daily. So this is in much weaker shape here. And again, on the weekly time frame, this is still set up very nicely for another bear play to the downside. So broker dealers, I'm not very bullish on right here. The failure to reclaim that 50 moving average, losing the 200 moving average on a weekly basis, and you lost all four major moving averages there on a weekly basis. So broker dealers in much weaker shape there. Anyways, over to crude here. So let's shift gears into energy. So again, crude did back off a little bit again, and we filled that gap. And I talked to you guys about this ever since we popped up there, right? I said, look, this is, I would be shocked, floored, if we just advanced from here without filling that gap on crude futures. And then, we held this trend line again. If we look at the weekly, you can see it goes all the way back to August 2021. And that's been kind of an area we broke through it, then we got back above it. And now, we're holding back above, right? So we got a little tail candle there on the weekly. It got defended. If this consolidates sideways, though, this can go down to 70 again. And 70 is going to be good support there for crude if it holds. If it breaks, then it opens the door back up for that move down to 60. But for right now, crude's hanging in there, and it got a nice bounce off that trend line. If you get back above, I would say this pivot here. So what's that, 70? We'll just call it 78. You get above 78, then you can go retest 80, and then you can retest that 200 again. So those are the levels I'm watching here, but you don't want to see it consolidate and break 74. That would take you down to $70 in the near term. XLE, so we had Exxon, that had a new all-time high Friday. No new all-time closing high though. So just, it's not the end of the world, right? It's still doing just fine, but it's just a little suspect that it didn't make a new all-time closing high, at least here in the near term. Chevron reporting as well, that gap down but closed green. And Conoco, same thing, that gap down but closed green as well. So XLE, in decent shape there. Again, we held the 82 handle. It did back off the 120 moving average there though by Friday. Again, if this shapes up and gets back up into this 87 area and consolidates, it can go to 90. Right now, I don't see any issues. I just wouldn't do anything with them at the moment. XOP on the weaker side, it did get a nice bid on Friday, but still below those moving averages there on the daily. And then the OIH lost that 280 handle, so a little bit of weakness there, and it failed to reclaim the 200 by Friday's close. But it's not a terrible chart. I just don't like that you're back inside of this this big wide range red bar. But for right now, I wouldn't do anything with this pattern here. It's just kind of in a holding kind of choppy zone currently. All right, over to nat gas. So nat gas got a nice bid on Friday. There was a pipeline in Mississippi that got hit in the morning with lightning, and you can see the big surge there in the morning. I mean, you're talking 228 to 253 in about 35-40 minutes there in the morning, and that's that's the nature of nat gas. Either way, nat gas with a nice pop there. It did come a little bit off the highs, but you can see here on the weekly, we made a new closing high, a new local closing high there. So I think that this is set up for a nice pop in the month of May again. We talked about this bottoming tail 2 months ago. We tested it again last month, and then we got a nice bid off that area. So I believe nat gas is probably poised to set up to an attack around that $3 handle in the month of May. But either way, nice little pop there on Friday. Over to some other areas here. So uranium, CCJ with a nice bid. Look at that volatility on Friday, big dump there, and then a nice reversal. This is set up for a move up to 28. If you can get through that, you have upside to 29. So nice pop there. URNM obviously getting a bid off of that. You do have some higher lows here. I just don't like I would have loved a close definitively above that weekly or that daily 50 MA. And I don't like that kind of inside bar, bearish inside bar kind of look here on the weekly. But, if you can get back above this area, then you could make a case you have a failed breakdown. Either way, URNM, holding up, and CCJ is certainly holding up very nicely there. Some of the ag names here, DBC, getting a bit off this trend line. We talked about that. So that did, bounce off that area on Friday, and it did hold this previous, sideways trend line by the end of the week. So it's holding up okay. We'll see what it does here into next week. Over to the DXY. So dollar index getting a bid on Friday, although it never closed above that 20-day moving average. There is some more problems with the yen. So Japanese central bank doing some more easing there, and you can see the dollar got a huge bid versus the yen on Friday. So it looks like Japan's panicking again here. No surprise, but the euro still remains strong, at least at the moment. You can see it holding trend for right now. The DXY to me, though, still has to, at this point, the fact that it's unable to reclaim that 20-day moving average tells me it probably needs to go and test that 100 handle one more time. And I think that is a good area of support for the DXY. For gold here, gold's still hammering on that 1994 area. So this green bar low is still holding on. And, again, obviously, if the euro gets a bid, if the dollar comes back in, it's probably going to be a tailwind there for gold. If it loses this area, then you're going, I would say, probably to that 50-day moving average. That's where you got some good support. That may even coincide with this previous 1962 area there for gold. And it's holding up nicely. The miners also having a nice move and a pullback there. There is support at the 33 handle. They still are trying to work off that overbought condition there. And then silver, same kind of thing. This is still overbought on the weekly, but again, nice pullback there. I still think it probably wants to go down and test 24 to 23.50 here over the next couple of weeks. It just had a big surge, and I think it needs to do some more backing and filling. But nice move there for the metals, obviously, really in quarter one, and we'll see how that fares. As we get into quarter two, platinum having a nice surge. Obviously, last week we talked about, and it did some pulling back. This week it held the 1080 area. We'll see how it shapes up once that 20 moving average catches up to price there. That could add a little bit more fuel. And I think platinum can get to 1200 should it stay, should it be able to hold up, in this area here. Then lastly, copper actually came in finally. We broke this trend line, and then we kind of just came down 1, 2, 3, and then now we're just inside of this big red bar from Tuesday. I think this is setting up a pattern, possible bear flag to set up a move to 375, which would be that 200-day moving average. Again, we've been talking about 375 for a very long time on copper, and I think it's finally about to get to that area. That is good support there for HG. So we'll see what that does this week. Bitcoin all over the map, especially in the middle of the week. This is Wednesday. Huge pop all the way back up to 30,000. Came all the way back in, then closed flat. Then the next day, huge bid on Thursday, and then kind of flat to negative on Friday. It's basically flattish over the weekend. If this consolidates, this can have one more move still to 32 to 32,500. That's really the upside that I would give to BTC. All right, over to the spiders here. Lastly, one more time. Again, we've had a nice move here. We do have the FOMC, we have Apple. So there is a little bit left for the market to rally on, but again, equal weight and showing lower highs here. Breadth is very poor. It's really just big tech, and I wonder if this market can really hold up much longer after these big tech earnings are out of the way and after the FOMC is out of the way, especially if we really start to rally up ahead of that. I think we're kind of pricing in, any dovishness or any good positive earnings that could come out of Apple. But anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you all next week.